What's going on, everybody? The content you are about to consume is from a recently recorded Twitter space. So for this one, it's just going to be audio, no visuals. But going forward, all of the spaces will be uploaded to YouTube with images to match. All right, I got to turn this music off. Oh, man. All right, what's going on, guys? Just going to give it a couple minutes, let everybody load on in. Teddy, I gave you a mic. Anybody that wants a mic, feel free to pop on up and grab one. What a day. All right. Yeah, I'm just going to give it a few minutes to load up. I just sent out the link to the group. So, baby, we are so close to Showtime round 3. And what I mean by that is very similarly on our bounce from, actually, this is Showtime round 4, I should say. NQ daily, I'm looking that first bounce that we had on July 31st, retraced 79% for a rejection. That next bounce that we had following the dump on September 1st, retraced into 79%, rejected. Third attempt, that dates back about 2 weeks, October 12th, 79% rejection. Currently, we are tapping 50% of the range. There is one bearish imbalance up in discount. We've gotten about 90% of it up to 14,948, and that would fill at 14,979. And to me, again, that's Showtime round 4. At that point, I'll be neutral. If price decides that it wants to run up through there, I think the bears have something to be totally scared about. But again, at that point, it can go either way. It was very similar to what it was like when we were in the Discord. What was that, 2 weeks ago? When we literally called top on that that most recent dump down. Like at that point, it is fair game, and that's why, like, at that point, in that tweet that I had, I said, for instance, I like 14,979, and to me, at that point, it literally is a coin flip. You got a sweep of liquidity from the swing high on October 23rd. You fill that bearish imbalance in discount, and then from there, whatever happens, happens. But yeah, I don't know, man. It's we're getting into a pretty interesting spot here, but I'm just glad I was on the right side of things on this run up. And
yeah,
and right now we're in the midst of a bullish retracement. And then if we zoom it out farther than that, we're in a bearish trend from last year into this year, right? So it's really fractal, and all of it really depends on really what time frame and what ultimately what trend you think is going to hold true at a specific point. And I know it's not a popular opinion right now to be looking for higher prices because of everything that's going on economically, just all around the world. I mean, there's literally 2 wars going on, right? So being bullish sounds crazy, but again, I personally don't think any of it really has too much of an impact. And my stance, where I think everything is algorithmically driven. And to combat anybody who would I guess disagree with that, I would just say, earnings comes out, you get that earnings dump, and then what happens? Then you pump. Look at AMD, for instance. AMD dumped right off the bat, right? And I said it in the group, I have the screen grab of it. I said dump and pump, watch. And we pumped. We took out higher time frame liquidity, and from there almost immediately reversed. And obviously today we were up like $9. Or how about at 2 o'clock when FOMC stuff drops? Today isn't the best example because it was kind of, I guess you could say, muted. It wasn't as crazy as it usually is. But how at 2 o'clock does that data drop? Immediately at 2 o'clock, price goes bananas. There's no way anyone read through anything that was just posted, right? Very similar to earnings. This stuff comes out right on the dot and price goes bananas. To me, that ain't any personal intervention there. That's all algorithmically driven. So that's ultimately my stance and how I would back it up. And again, it's in the chart. I mean, you can look at it too. It's not, it's really not foreign, especially when you start to get an understanding of, just some of the basic concepts on what drives price. So that's ultimately the whole concept behind, you know, what the strategies that I'm using is. It's literally called smart money concepts. Money is not buying when everything's going bananas. They're well into their positions and they're selling on, you know, retail who thinks they might have the power to move something. And that's the thing to me. Where can we find liquidity that will make it make sense and be able to generate a move, you know, the gasoline to fuel this engine, which is liquidity, it's money, right? Where can we go to trigger some of those orders so that price can drive into the direction that, you know, the people who are selling on us are wanting it to go. So that's the thing. I mean, they're not, you know, selling is, you know, it's obvious, but it's not something in which I think is going to have an immediate impact, just like a lot of other things that are occurring. You know, it's like pretty much this whole year. Yeah, it's just really hard for me to believe. I know we talked about it a little bit before, but going into an election year, I don't know. As crazy as it might sound, you know, I really don't. I don't anticipate that happening. That would be a huge fumble for anybody in charge at that time to, I guess, like willingly allow that type of stuff to happen. And to me, it's so manipulated and so controlled that I just don't think it will. You know, but anyways, I mean, much open, man. I mean, you know what? It's funny because this is something that, you know, we've been talking about, obviously, between us and, you know, with others in the group and stuff. But it's just funny how a lot of the concepts do overlap, and they literally they kind of are the same exact thing. But how we can be so different as traders in a sense where, to me, if I, you know, just from people who I, you know, I know we've been trading for quite a bit, but to like compare you with somebody else who I also trade with, and I don't even think you guys have linked up just yet, but Ryan in the group, like almost identical to your strategy on how he's more, I guess, in tune with liquidity sweeps and playing those rather than what I would do, where I don't want to say I'm a retracement trader, but to me, I look for the best risk reward setup through market structure shift, retracements into discount, specifically bullish imbalances, and lift off from there. You're looking for those initial breaks, or if I'm not mistaken,
It's
like
just my bad.
No, you're good. You got it.
It's just more that I think that you trade more zero DTE, so your strategy is going to be a little different. Even though some of our levels meet up, I'm waiting.
100%.
Yeah, I'm waiting for more bigger. That's why I switch. Like you trade more indices and like SPY, ES, you know, whatever. That's why I trade so many different stocks because, like, obviously, if you've been following me for a while, I have a certain style. I'm looking for certain things. All my stuff is kind of repetitive on the setups I'm looking for. Just looking for key pivots as supply and demand, but also levels that have been like respected over time. So like how I said on Amazon, let me see this the 132.20 level. So I have that marked. We didn't trade it for like the last 2-3 weeks, but as you can see, when it got down, it was rejected for 3 days in a row. It wicked up, rejected 132.20, came back down. It's kind of in a chop for on the daily. Came back up and rejected it to the center. That's what you would call like a relative equal high right there, right before the gap. So what
Mm-hmm.
that created for me on the daily was just a clear resistance points. Like if it rejected it 4 out of the 14 days or whatever, but it came back up when it got some strength, 4 straight green days, and then wicked up and rejected it. Okay, the following day I'm going to look at that and say, okay, we have relative equal highs dating back to September 22nd on the gap down. If we were to break, that's where the price action runs in. So like, okay, I'll have it charted, and I'll be watching the 30. I'm watching price action in the 5-minute, watching the candles. The candles tell you the story, So I'll be
Right.
looking for a reject. That's why I call it reject and go long, because essentially every reject or go long, I'm expecting reject, because obviously that's a key pivot point of the supply zone. And that's where the sellers are stepping in. So when it reaches that price, essentially it's the algos or whatever, it's selling off from that
Right.
point. So what I would do is obviously watch the price action. If it breaks, okay, that's cool. That's when people jump in, like, oh, it's entered the gap. They jump in. However, I'm waiting for a close above it, because what I'm noticing over with these algos or price action, whatever, how you and Teddy were just talking, whatever it is, when it does break a key pivot point like that and enter the gap, almost 9 out of 10 times it's going to come back down and test the 132.20 for prior resistance turn support. And that's when I'm entering calls or that's when and if it comes back down and fails the back test, it's easy for me because that 132.20 is a clear level, right? So
Right.
if I'm jumping in, I'm getting in. It's an easy entry exit for me. Have we break it? We close above it. Okay, I'm in calls. I'm gonna let it go. See if we enter the gap. See if it shows strength. If we close below it, I'm out. It's a 10% loss. That's why, like
Right.
my trading strategy is just so simple. It's just about identifying these levels, finding these gaps, finding these relative highs, seeing, it comes up, sweeps liquidity or whatever you call it, creates a new high, takes out the swing high. But let's see if it comes back down and back test. If it doesn't, I don't FOMO anymore. If it rips past it and you get the 30-minute candle where it rips past it and it creates a new high, I'm rarely gonna jump in. I missed it, over time, I don't have no numbers to back it, but 9 out of 10 times when there's a key pivot point right there and you're breaking, that relative equal high or, sweeping liquidity right there and it enters the gap, it is going to have a sell off. That's where the big money is going to take their profits or, the algos are going to come back down and you will see if that 132.20 is now support. So that's kind of how I set up a lot of my trades. That's why a lot of my trades, I always say, oh, it's to the set, because I'm going over 10, 20 charts a night. And I'm just looking for my strategy, like what fits, what I trade. And that's why I switch stocks so much. And yeah.
No, dude. You would have had an absolute heater on SPY on Tuesday, very similar to what you just talked about. We took liquidity to the upside on the retracement back. We actually formed an imbalance right at the previous high, and we just came back down, kissed it, and took off again. I mean, and I understand where the strategy that you use comes from. I mean, the way that I look at it is just anytime that we take out a swing high or swing low, obviously you're going to get one of two things that are going to occur. You're either going to break out or explode higher, or you're going to, dump from there. Because to me, that's a liquidity grab. That's essentially what it's described at. Now, the next question from there is like, okay, how do we justify? How do we make sense of it, of where it's actually going to go next? And to me, it's like, very similar to you, where you're waiting for that retest of that breakout point. I look for and see if there's some sort of imbalance that forms at that previous high. And if an imbalance forms there, that leads me to have much more confidence that we're actually going to continue higher from that point.
Yeah. So today we gapped up. And what I use, see, that's the funny part because I never called them imbalances. But as you've seen my charts prior to even, trading with you, I've been using that volume gap
Yeah.
imbalance, right? So that's
Yep.
where it'll be a green candle or a red, whatever. It comes up and then it wicks and then it comes down. But then the next candle, jumps up into the wick and starts a steady, uptrend or whatever. And I've been using that forever. And that's the only way that I'll jump in. Like if we sweep liquidity, right? And if we get that volume look, or that volume bullish imbalance. That's what you call it,
Hmm.
right? Yeah. If we get
Yeah.
that look, I will jump in when it comes back down to test that. And if we close below that, then obviously I'm out because it wasn't true support. It's not going to hold it. That's the only way I will get in it. That's what I try to explain to people. My strategy is very simple. It's just I probably have the most, like first year I got in, it's tough trading. Everyone kind of blows in the counter, whatever. And one day I just said, like, I'm just going to be disciplined and see what happens. And I never say, like, what if, never FOMO. If it doesn't backtest, I've watched trades rip 200, 300% because, it's liquidity sweep and it just got strong, never came back down to backtest. And over time, I've just been fine with just letting it ride. Like, I trade so much, like, I will find another one.
No.
Too many people are jumping in on the wicks or the wick pass and they'll say, "Oh, it passed 132.20." I'm saying I understand that, but most of my stuff is from a daily, weekly candle, and I pick the daily, weekly candle because exactly what that is. One candle represents a week, so you get more of
Right.
more of a market structure with a week and a daily. If you trade on the 5 minute, you're looking for the intraday. It's cool if you scalp SPY and all these other ones, but like as you can see, the last couple of days trading Amazon, XOM, AMD, you would have got chopped out of every single contract. I don't care how good you are. You know what I'm saying? So it's like
Hmm.
I look to the higher time frames because it's a bigger body of work. It's more concrete. You take a daily candle that holds those levels that it touches over the course of 2 weeks is going to mean more. It's just more concrete than a 5 minute or 30-minute candle. It doesn't mean you can't trade those. Just for my styles, I'm not really in those zero DTEs, even though I guess I kind of am because I,
You
I don't
could.
I don't hold anything overnight. Yeah. So
Yeah, I mean, you could. And dude, it's actually so funny. The more and more we talk about this, how similar it really is. But I'm the same way where, obviously I have my own specific model that, I think a lot of people that are in here listening right now already know about. If you don't, it's on YouTube. It's not a secret or anything like that. But um, the only time that I'm really refraining from looking to use that model is when we take out a higher time frame pool of liquidity, swing higher, swing low on a higher time frame. And I'm usually using hourly, and then I move to the daily or even the weekly when it applies. But it's just funny that you say that, because it's literally, you know, the higher time frame is going to offer you so much more information in terms of what's going to have more orders processed in an hourly candle or in a 5 minute candle. I would be shocked
100.
if there's any 5 minute candle that's ever going to accumulate more orders than what an hourly would. And that's why, I'm annoying about it, but when we talk in the charts, sometimes, a basic, an idea that I have or something like that, it takes 10 minutes for me to write, but I'm like, look, I am looking towards a higher time frame level of liquidity, and to me at that point, that's where I look for reversals. And if they don't come, if we make a bullish imbalance up and through, so be it. And that's, that would be a situation where, it would fall into your criteria, really, where you're making that imbalance, wait for the retest and take off from there. um but yeah, no, it is funny. And for the longest time, I really wasn't exactly sure if you were using supply and demand or what it was. But obviously we're using two different concepts. But I did, I talked to Teddy about this. I did watch a little like course on supply and demand, and while it's not something that I would use, I see so much overlap in that and what I'm using, that it's just pretty interesting to see how
It's
me, price rules all, and all the other stuff. I'm
free.
not going to be rude about it, but how I feel about it, I guess.
Nah, but that's the point. Like it is. See, like that's why it's hard to explain my strategy, because like you ever look at something and it's like hard to explain what's going on. That's kind of like with my entire strategy, because I am looking at the daily, weekly for supply and demand, but I'm also looking at the 30-minute for the volume imbalances, because I've used those forever. I just didn't really know what they. I just didn't really comb that until I met you.
No, and dude, hold that thought just for a sec. And it's interesting that you had already been feeling it as that, because you don't see them as much on indices. And what I mean by volume imbalance is just a gap up or gap down, using like an advanced gap theory. And when we're gapping up, all that's showing me is there's some urgency to move higher. If we're gapping,
Exactly.
we're showing
Like
urgency to go lower. So that's why I use those levels as a level of a bounce or a level of brick wall. You know what I'm saying? Like, so, and you see them a lot more on individual names that you're trading than you would on
yeah.
the indices. So it's just ironic that lines up as well.
Yeah, exactly. That's why I always say, whether you want to say they're algos or buyers, I like when you trade, you don't really give a shit. At least I don't. I know that if I see a candle, green, and then I see a huge, volume gap imbalance, boom, with the gap, I immediately mark that and I say, okay, there was someone was stepping in here buying, or the algos tripped, and this is gonna go. Volume is definitely coming in, whatever you want to call it. I don't really care, but that if it creates that volume gap imbalance, that it's going that direction, at least for now. So I would
Totally.
say it's safe to put, if it breaks that level and you get a volume gap imbalance, you can mark that for support, and then you can essentially just trade your whole trade off that. And if it closes below, obviously it didn't respect it. And it was just, if it's at the supply zone, maybe it was just a liquidity grab to wick people out, or whatever. But
Right.
at least you have a pure, like I always tell people, you should, whatever your model is, I don't care if it's Mando's, mine, anyone's, you use Fib, you use whatever you use. If you don't have an entry and an exit plan, you'd be surprised like how many people I talk to. I say, okay, you got in there, okay. What was your exit plan? Oh, 20%. You know what I'm saying?
Yeah.
I'm I'm
No,
so I mean I don't like to, like you say like my model's different. You don't like to shit on anyone's model, but like
I
that
do.
20%
Shouldn't.
that 20% thing is just so like, so basically what you're saying is you're just looking for a level, you're looking for a break, and 20% is your hopium of a stop loss. You have no structure of level, no structure of imbalance, no structure, volume gap imbalance of what you are calling support. So theoretically, you're just looking for, a level break that you've seen. You're not watching price action. You're just, oh, I'm going to add here, and I hope it doesn't go past 20%. You know what I'm saying? That's why so many of my trades are like, you'll see me. I'll post in the chat like, there's no way I could lie. I say like I'm in at this price, but sometimes I'll be like, oh, I'm out, and people will say like, oh, that was fast. Yeah, because broke the price, it closed under, I'm out. That was my, that's my entry and exit. I'm not here to like hold on and say like, oh, I'm the best. Maybe it'll bounce at this level. You should have a clear entry, clear exit. I lose probably I probably win one of two trades a day, but my loss is 5, 10, 12, 15%. My gains are usually from the top or the bottom where they're big gainers, you know?
Right. No, dude, completely. And I think that was probably the biggest adjustment I had to make. And, you know, I think it's just a personal thing where it was like, you know, I grew up, I had structure forever. And then you get out of college, you're not playing baseball anymore, and you can do whatever you want. And you lose a lot of that discipline and structure in your life. So that then you start doing this. And if you don't have that, you're toast.
Boy,
So for me, it was like, the real differentiator I gotta admit is just being able to place the order straight on the screen and have it there, and there's zero intervention from me. I'm placing it, that's where it's going to be, and so on and so forth. I mean, I'm not even going to consider a trade in which if whatever the stop target for me, which would make sense, which anybody who has been trading with me for a little bit now knows, it's likely a liquidity sweep, right? So if I'm
yeah,
looking long and we take out a swing low, to me, that is a bearish market structure shift. Could we pop from there? Yeah, I would actually be looking for a little bit of a move higher to get into a discount bearish and balance to look to play it down lower again. So for me, if it doesn't make sense, if the numbers don't make sense, like for example, if I'm going into a trade and the swing high or my target for buy side liquidity is a $700 gain, let's just say, but my potential stop loss in this situation is 450 bucks. I wouldn't even really take that trade. To me, it doesn't make that much as much sense, and I can be as confident as possible, but if it's not going to make sense, I mean, I would prefer to look to something else. I mean, I think that is a lot of growth, to be honest with you, because in the past I would be looking to you know, take a quick $100 and be okay with it, and ultimately have unlimited downside risk. Whatever the contract costs. But
yeah.
I mean, that to me is it's something that differentiates people who can make some serious money doing this, and people who are again following into some hopium and just hoping things are going to work out for them. And
Yes,
more often than not, it doesn't. So.
yeah, 100%. You're the you're the leader or the chat or the host in here. So I showed a chart in the Discord just
Oh,
now. If
yo,
anyone's in there,
so if you post it on Twitter right now, and then you click on the three bubbles up at the top of it, you can just place it literally right up top.
let me see. It's nothing crazy. I just want to show an example of like what I'm talking about. Hold on.
Oh, yeah. So Kyle just put a comment and he said, I'll just go through these really quickly. One of the better spaces, recognizing differences and respecting similarities. Yeah, I mean, dude, for a while, I mean, I wouldn't say it ever got hostile, but like our terminologies just didn't link. So it was like a lot of the stuff that we were talking about to each other, we'd be like, no, but this. And I'm like, dude, that's what I mean. And vice versa. He would be like, no,
Yeah.
literally what I mean. And one of the biggest ones, actually, I'll just get into this quickly because it still drives me nuts when people talk about a double top. And the thing about that, or the double bottom, whatever, there's different situations in that specific setup, right? And I think people who, I hate to say it, but some people learned it the right way, some people learned it the completely wrong way, right? So with you kind of had the understanding where, okay, you're looking for that double top type of rejection move after a liquidity sweep, but a lot of people don't
Yeah.
say it that way. So when they're calling out double tops, I'm like, dude, this I know what you're saying, but this is not a double top. If we're not taking out liquidity or taking out that previous candle's high, the first top,
Yeah.
then realistically you're asking for fire, because to me, if we're getting that second high being lower than the previous high, that's to me a relative equal high. And what that means is, off that first high, for us to get that rejection that we obviously had to have made, what had to have happened? People had to have come in and pushed price down, right?
Yeah.
So the
Sell off. Yeah.
liquidity stop losses resting right above that high, right? So that second time we get back up there, we're not triggering any of those if we don't go up and actually take out that high. So that's the liquidity right there. And now if you come in and you don't make that second high, they're essentially doubling down on that position, two times the liquidity right at that point. That is begging to get swiped, right? So even if that second move goes down just a little bit, I am, 9.9% out of 10, we're coming back to that, and we're going to shred that level, take out everybody's stop loss. And how is that a viable trading strategy? You know,
Yeah. No, no doubt.
people learn properly, and I think it's probably because there's so many complete morons on this app that, teach people, but they can't even teach themselves. They can't even understand it, or have any understanding or any way to kind of explain how price even works in the first place.
That's a big thing. I like people. I think when they look at shit, they don't understand what's going on. So like, if you even the people that trade the cup and handles, the inverse head and shoulders, they see the formation or whatever they want to call it, but they don't understand what they're looking at, the price action, why they say the neckline break, or you know what I'm saying. They don't understand
Yeah,
the actual price flow of what's going on. They just know that if it goes here and breaks this, oh, it's a cup and handle. When they see a big old fucking cup and then it starts going down, they assume it's a cup and handle. They put the two little lines. But dude, the breakout obviously is a lot of times at the relative equal high for a cup and handle. That's what I'm saying. You posted the other day, and
totally.
it's
Yeah,
like,
no, I did
so
right.
so so I'm saying, like, yeah, it breaks the handle, and that's when they get it, and then they get fucking clapped. But they should have been waiting. There's a relative equal high right there. Wait for the liquidity guard, the liquidity sweep up there, and then you enter. You don't have to enter just because you see a cup and handle. And I think when all this stuff was created, it was created with a price action basis, and over time, people started trading and just ruining like like the inverse and the cup and handle and all this, because they don't truly understand what's going on with the price action. They don't understand exactly what they're looking at. They just know that they see a big ass cup, so they circle it with a handle. You know what I'm saying? If that makes
Dude,
sense.
no, I put it up there, reason for a failed cup and handle. I think when whoever made up these concepts or studied them and, show that, yeah, they do tend to work, they probably had a reasoning behind it and they could explain it. And then, over time, obviously, the more and more watered down things get, and everybody's teaching stuff at this time. So, it gets lost, but, there's no explanation to it. And
Yeah,
I know everybody who's in the group right now, you're going to hear me say this, and you're gonna come back and you're gonna screen record it and you're gonna play it every time where I start to bitch and complain about it in there. But there are instances where the cup and handle works. There are instances where head and shoulders work. There's an instance where inverted head and shoulders works. It will work, but there's criteria that needs to be met for it, and the
100.
understanding of it. You know what I'm saying? And
Yeah,
that drives me absolutely crazy. We have people in, sometimes they'll pop in and they'll say it, and I'm not trying to be a jerk. I'm just like, oh, like, why does that work? And they're just like, oh, I don't know, somebody taught me it. I'm like, well, would you like to know? I can tell you that. um eh, but that just goes back to me saying before, like, dude, I have to be able to justify every single move, and if I can't
yeah.
justify, then there's no way I'm taking that trade. Even if it's a possibility that it might not work and the risk completely outweighs the reward, why even bother? You're just playing with fire.
Yeah, the crazy part is with like, this is why Discord could benefit everyone, because like obviously the double high, when I say that, I was trading in as a relative equal high, liquidity sweep. That's like the rules of it was the same rules as you are. That's
Right.
why there's a back test and you're not just getting a wick for a stop loss hunt and then it's coming back down. I traded exactly like you did. So like, I mean, some good comes out of it for everyone. That's why, like, now I call it a relative equal high. You trade it the exact fucking same, but at least now it has a basis of a name that makes more sense for people that truly pay attention to price action, or the correct terminology.
No,
So I mean,
I mean, think about this, Melski. When we first got on Twitter, what was it? Probably like almost 4 years ago at this point.
yeah,
We
man,
were
a long time ago.
People would literally have in their bios breakout trader, right?
Yeah,
Now, I bet you go through every single person, not you, everybody in here, look and see if anyone that you follow right now has breakout trader in their bio. They don't, because they're all gone. They're not here anymore, because you could trade the breakout all day in 2020 and even in 2021, and it worked out. Why? Because the market was outrageous. The inflow of liquidity was just absolutely enormous. And those breakouts tended to level up. Now, on
yeah,
the flip side of that, what happens on these breakout traders now? They get smoked more often than not. So it's like,
yeah,
there's so much that more that goes into it. And I'm not trying to sit here and say, oh, I know everything, I'm a genius, this, that, whatever.
yeah,
But there's just very minimal things that I think people can learn that would make them so much better. And that's why I focus on that and not calling out stuff. I was in a trade for 2 minutes today. There's no way that anyone would have been able to take my call out, put it into the play, pull out at the same time as I did, and made nearly the same amount of money as me. There's absolutely no shot that would have ever happened. So why even look for that? Why not just look to kind of do it on your own? And it's really, it will get much easier. And I think time obviously heals all, but he'll hurt
yeah.
to
I
watch
mean,
it break. And I know you hate
uh,
him.
No. I mean, obviously, I'm changing shit that you're doing too. You know what I'm saying? I'm like I said, I never take it. I know we probably throw subtle jabs at each other in the beginning and shit. I mean, because our trading strategies are so different. But I mean, at the end of the day, like you're gonna learn from everyone if you're gonna be a good trader. You know what I'm saying? Like at the end of the day, I would have no problem coming back 2 years from now and saying like, yeah, I made all this money because I listened to Mondo on this relative equal. You know what I'm saying? Like to
No,
to be a
dude, completely,
be a good
completely.
trader,
Yeah,
to be
bro.
a good trader, this shit isn't like basketball or something where you can just claim you'll be the best and go out there. Like if you don't have like respect for other people's opinions, unless you're making $1 million a day, then hey, do what you do. Yours is the best, you know.
Exactly.
But hey,
Like,
so I posted this chart. So I posted this chart on the Twitter. How do I get it in here? I don't know
here,
the
I'll do
limit.
it. Yeah, so you would just go down to that like arrow thing. I'm doing it right now, and then at the top, like as if you were to message it.
Oh, I'll do it. Share the
No,
spaces.
I just put it. You're up. You're up there. You're good.
All right, so you guys can see it.
Yeah,
Nothing
yeah.
crazy. I just want to explain something. So see, like that's why my charts, like the 30 minutes, Mondo's like has all these levels, all this stuff. Mine is off a daily, weekly level. So as you can see, it respects my levels almost. You get the chop in the middle, and then when it meets the level, you're gonna get some action. You're gonna get a liquidity sweep. At the bottom, you're gonna see if you get true support. So if you look to the left, the very left, there's that long wick that comes down and touches 106.50, right? So you guys see that on the 30-minute, like all the way to the left, the long
Yep.
wick. And then you get those chops, and then that big red candle where it comes down, you just lost 106.50. So that'd be like my back test. But this 106.50 is off a daily level inside bar, which means it traded inside the previous day's range. So I trade those a
Mhm.
lot, and what it just shows is there's a lot of indecision and price action. Obviously, if you get an inside bar, it's a choppy day, right? It didn't clear the previous day's candle. So what you're looking for is a huge breakout move, not a breakout move, but you're going to test the supply and demand of that inside bar. That's just how I trade. So when you see that long red candle, it loses. See the next day how it comes down, and then the long wick comes up and taps it to the cent. See the when we lost support of 106.50 to the left. Okay, so what we did was lose it, came back up and tapped it, and now I know that is clear resistance, and that's off a daily level. So I'm bringing the daily levels essentially to the 30-minute, and that's how I'm avoiding the chops with the 5-minute in this market. So you might see some of my levels like this. They might not match up truly to the 30-minute, but they're from the daily and weekly. You guys get what I'm saying? From a higher time frame. So as
Yo,
you can see, it comes back. What's up?
no. Go ahead. Finish. Yeah, I'm gonna add to it what you're saying.
So you see it come back up and test. That's called the reject. So we lost support. We're coming back up, reject and go. And then you see it drops from what 106.50 to 105. If you're in 106 puts, that's probably a 250% gainer right there, just based off one level, off one daily level, off one candle on the daily that it's respecting on the 30-minute. And then we get all the chop on the see all these ones in the middle of this chop. This is why I trade so many different stocks. If it's in the middle like that, I have all like my triggers and my notifications say I'm not going to mess with this. So I didn't trade XOM for all these 30-minute candles until we came back up, and on the daily we got the test today of the 106.50. We got the breakout, we got the back test. That's when we enter calls. That third green candle comes below the 106.50. Did we exit? No, because it didn't close. That's why I'm saying we're buying at these key levels right on the cent. So if it does go to 106.42, we're down 3-4%, nothing, pennies. And then we got that third candle bounce, and that's when we exited. And then as you can see, we lost support, and it's in the chop, and then it comes back up. That long wick right there at the end of the day at 11 o'clock comes up and taps it and then dies. So that's kind of the emphasis of why my 30 minutes are marked with daily and weekly. It's just
Right.
those key pivots are respected over time, over the daily, and that's why I continue to come back to XOM. And when you trade a lot of stocks like this, you understand levels like when we used to trade XOM all the time. We know 114.77 is a level. So if I am trading other stocks and it gets back to that level, I know that's a huge key pivot in the SR flip from July or whatever. So then I will come back to that stock and trade it. That's how I stay away from the intraday, and I'm continuously bouncing around to higher time frame levels, you know, but trade it on the 30-minute.
Yo, all right. So look how much this overlaps. I just saw it and I was like, all right, I gotta mark this up. So I just posted underneath yours where you have your that red line that you have there, which
Yeah,
you would call it a pivot, right?
yeah.
Dude, so look how perfectly that lines up with the bearish imbalance right there. Do you see those like two sloppy red lines that I drew? It's literally
Wait,
the exact point.
where are you?
Right underneath your post.
In where, the chat or
Yeah. So,
I
yeah.
see it. You replied to it. Okay.
Yeah. So check that, bro. So
Okay.
that's the
Yes.
balance.
So
There's your
yeah, if
bear
you go to the
structure
my
shift.
bad, go.
No,
Go
yeah.
on.
So there's your bearish imbalance. Your market structure shift is taking out that line that you have that low wick. And then there's your retracement into discount. And then from there, I look for it to go lower. You're using the higher time frame to essentially nail those moves inside of the tight window that I'm looking at. That's
Yeah.
crazy.
Yeah, that's what I'm saying. I might be like a borderline. What's your strategy? The ICT, right?
I mean,
Like,
it's they call it SMC, smart money concepts, but he's the one who coined it and everything like that. I mean, listen, like say what you want
yeah,
about him. You could say he's a paper trader. You could say he's boring as hell to listen to. You could say he's arrogant. Bro, his concepts do not miss. I don't care what anybody on here says. I'm living proof. That's why I post all my trades and all this crap. Just look, it's just like you could
that,
say what you
that's
want
your
about
guy.
him. Yeah, bro, I owe that guy a lot, and I've never spoken to him. Nothing. He liked a couple of my tweets, but all it took was Ryan, who's in the group, to literally say to me, "Yo, dude, I'm checking this out," because I was at a breaking point, bro. I was like, some days I'd make so much money, other days I would lose
Yeah.
all of it, and I'm
It
just
wa-
like, bro, I cannot do this sustainably and live off of this. And then he goes, "Yo, check this out," and of course, me, being me. I want to just call BS. I'm just like, yo, there's no way. This guy is all bullshit. But dude, after watching this stuff and then watching it happen intraday, I'm just like, dude, I can't call BS on it. I just need to get better at it.
y-
And it's just amazing how kind of just because you're a price trader as well. I mean, to me, there's just I can't justify a moving average, a line that moves on my chart. I can't do
yeah.
it. There's no justification for it. I can justify every single move that occurs on the chart. And to me, whether I'm right or wrong, whether, if maybe I could think of two possible different, ideas between a trade, then all that tells me is like, don't take it. Why would I take it if I could see both avenues clear as day, And that goes back to me on the daily chart. I'm pretty neutral coming up here and probably about 50 points just based on that. I could see how it goes either way. And if I can
Yeah.
justify, that's all I need.
Yeah. 100%. That Sam posted on he posted FVG. That's what fair value gap, right, on the
Yeah,
XOM.
yeah. So
Yeah.
yeah,
So
go
see,
ahead.
with your strategy of the smart, what's it called? Smart.
Yeah, so I just got some Nathan, he's in the group as well. He just said S smart money was coined by Wyckoff. ICT rewrote Wyckoff, changed my mind. I have no idea what Wyckoff is, so I can't claim that. And look, even if he didn't create it, I don't care,
He's the
bro.
master. Who gives a
Yeah,
shit?
money, I don't give a shit, man. Like
Jordan didn't create basketball, but he's the best. It is what it
yeah,
is, bro.
I don't care, bro.
Right?
And that's the thing, like this guy, how many trades does this guy have to show you where he's pulling 10 contracts or 40 racks every day,
Yeah.
whether it's paper or not? I don't care. He's still doing it. Like
And I
it's just
think, yeah, no, I get it, but I think that's why it's so hard to like my strategy is so simple, but it's also like I got to figure out a way to like because you see how you call it the fair value gap. It's I just know what I'm looking at with I understand price and I understand the charts and what they're doing. So when you can understand like the smart money, he understands like liquidity sweeps are being grabbed and you understand what's going on in the chart. It just makes like you look at it as second nature when you get to these key these key levels. I think the only difference is like we do a lot of the same stuff because I was telling you like I've been using that gap and the fair value gap and all that. I kind of just over time to learn how to read, like price action and what's going on. So I've kind of like I don't know. I just always called it different stuff. I guess it's kind of
Yeah.
cool to watch like fair value gap. Like I've been trading the fair value gap for 2 years, but I kind of just like over time I picked up little strategies on my own stuff. Keep adding it, keep adding it. And I've noticed that like I've understand. I go back and look at my charts and look at what I'm looking at. When you see a gap up in a candle like that, whether it's algo or people buying, you got to think it's going that way now because obviously something huge stepped in the algo or big buys, whatever you think it is. And over time, you start to learn like, damn, every time it does that, this is what it does, and you understand the concept of the candle.
dude, completely. And you're going to overlap with Teddy here. So I'm Teddy. I know you wanted to pop in because that's the conversation we've had multiple times. And then after you, to pop into stocks after dark. He's been up here a few times. I want to give him a chance to talk it out. But
Yeah, I was gonna say, like, people might have different language for the same thing, which is just learning how to read price action, right? So somebody
yep.
can call it support and resistance, another person can call it relative equal highs, so it's all just reading price action, but it's a different language. It's all it is. So that's why everybody can succeed at trading using different language. So yeah, I mean, right, you guys are right. There's no reason to argue about it and say, oh, this is right, this is wrong. Is if you're trading price, hey, it's math to me.
No,
I
it's
think, not to cut you off, I think Mondo's more how he says he goes over everything, and he says like, what were you just saying, Mondo, about the price basis? You said you have to like check it to make sure it's a. What were you saying? It was a
no, yeah. I mean,
not
it's
check it, but you can't justify. You
oh
said
yeah, no,
you're gonna
exactly.
jump in. You yeah.
And that's the thing, like, look, I might be different than a lot of other people, but for me, I needed to understand why price was going to do something. And for a lot of the time that I was trading, I had no idea. I would have all these little indicators and this and that, but like I didn't have a true like understanding as to why it was actually doing something that it was doing, right? Or why it went right, why it went wrong. I just didn't know. So that's why I might be overboard sometimes when I'm so like particular about the way it's said. It's just because when I'm trying to like teach somebody it's like I just want you to have an understanding of what I mean by it and how you can find it for yourself. You know what I'm saying? So like I'm it's really it really is just semantics, a lot of it, where it's just terminology that gets crossed and all of that. But I to me it's like I'm always trying to make sure that however I explain something, it's actually going to make sense to you. And if it doesn't make sense, then that's a problem. You know what I mean? Like, if everybody should be able to look at a chart, whether you have your indicators on, whether you don't have your indicators on, and even if it's a previous move, why did this happen? If you can go back
Yeah.
and justify it, that's to me, that's a win. As somebody who's trying
Yep.
to teach other people how I go about it, yo, that's a win. If you can justify it, great. If you could see both sides of it, okay, what does that tell you? Maybe not the best time to take a trade. If you can see one side dead set and then it doesn't go your way, what can you do? All right, let me look at a
Well,
different time frame, see if I
yeah.
miss something on the higher time frame that I should have, and you know. But hold up, yo, let's just pause this for a sec because I want to make sure Stocks After Dark gets on here. We've been having some of these, I post on Saturdays those long short quizzes, and he's been like wrecking them. So I'm curious just to see how he goes about it. But Stocks After Dark, if you're there, man, grab the mic.
Hey man, no, thanks for the invite and thanks for allowing me to speak. Great work on the charts, man. I always have a blast when you post them. I'm just curious to see what other people see and whatnot. But yeah,
You've been
yeah,
crushing.
thanks, man. I incorporate some of what you use. Mike's ICT. He's a smart guy, like you said, man. Doesn't matter whether you like the guy or not. He knows what he's showing, and it doesn't matter whether he's paper trading and whatnot. Can't really argue with the
Right.
fact that what he's showing works. I don't use it to the full max. I'm not trading the silver bullet, the turtle soup, all this other stuff he names it and whatnot. I do incorporate some of it. My main strategy that I trade is something called the Strat. Not sure if anybody heard of it, but
Oh, another price. That's another price. Price action type strategy, if I'm not
correct,
mistaken,
correct.
right?
So if you actually go back and look at it, the Strat was created by Rob Smith, Robin Black is what he's called. Unfortunately, he just passed away maybe like 3-4 months ago. But
Yeah.
he created this system where we name the candles three different types. Either we name it by numbers, like a 1, 2, and 3. One's an inside bar, one is consolidation. 2 means the directional candle either takes out the high or low of the previous candle. And 3 is just an engulfing candle or an outside bar. So it's no different than old traditional technical analysis, right? A lot of people used to know inside bars as bullish or bearish haramis. The outside bars used to be bullish or bearish engulfings and whatnot. So it's just a different way to categorize the candles, so that's easier for people to understand as opposed to looking at old charts and be like, oh, what does three green candles mean? Well, that's 3 white knights. What does 3 black candles mean? Or 3 red candles means? It's 3 black crows. Or what is Morning Star, abandoned baby? All this stuff. There were so many names that people got confused. But if you go back and you look at the Strat and ICT, they're very, very similar. They're not identical, but the way that we read price is very similar. So that's how I'm able to, when you post your charts, that's how I'm able to look at the imbalances and be like, hey, this is what's going to happen. So it's very similar to what you're using with smart money concept. It's another form of smart money concept, but just a little bit with its own little bit variances and whatnot. So I use that. I do
Right.
use like fair value gaps, and I look at liquidity, but I would say like liquidity in terms of buy side, sell side. It's similar to old traditional technical analysis. With everybody has heard of swing highs, swing lows, right? That's what we trade in terms of price action. If you're trading ICT, it's the same thing. Hey, we close below the daily low, we're probably looking to take out the next low. Once we take that out, they hit all the stops, they go up, back up, up top side to the next, swing high. Not the, they might not be the daily, could be the 30, could be 15. Depends on what time frame you're trading on and how you're trading. So a lot of it is, I don't want to say it's repackaged, but a lot of concepts are not going to be new because people need to understand market's been here for a while. It's not like there's going to be magical new, um, process created. It's just different ways to look at it and whatnot. So, like I said, I trade
No,
with the Strat is my primary thing, but I look at different aspects of it. I just don't look at day trading. I don't focus on one particular indicator. It's just looking at what price is telling us, and it's like you said, it's algorithmic. I believe that it's truly, hey, once they take out, stops on one side, they're going to just search for the next stops because the market is out there to basically liquidate everybody. They don't care about us, right? They're just trying to, let's see where I can go next. Let's get ping pong effect.
no, yeah, that's the way I say it. I say the market is in an endless search for more liquidity. That's the name of the game right there. I mean, I'm actually curious because I really do think that probably every style to price action is pretty similar. I mean, I was shocked because I know Teddy was trading supply and demand, Melski as well, and years ago I had one of my buddies send me one of these supply and demand courses, and I checked it out, and I was just like, wow, there's a lot of overlap here. And for me at this point, it's not something that I would like change or incorporate something else, but it's just interesting to see how like really price is price, and there are definitely different ways to go around it. You just kind of have to figure out which one is the one that's going to make the most sense. And to me, I like, just because I know it, obviously it's going to be easier to explain. It's just I'll use my model and use that as an explanation because I feel like I know the ins and outs, and I'm sure you guys do as well.
Hey, I want to say something real quick. The so going to like the three white soldiers, I think like what what Mando's saying, like when he explains this, like going back to the double top and stuff, yeah, they kind of overlap, but the explanation Mondo's given is actually more descriptive because you look at the three white soldiers or something, right? I'm looking at it right now. A lot of the pictures are different by the variation of the definition, but if you look at them, if you get three, then it creates a volume gap imbalance in between them. They should be gapping up off the previous day's high. Gapping up a volume gap imbalance, right? So you have to understand what you're looking at. Like I just think that some people, I think what bothers Mondo is like if he sees like, he's not saying it's wrong, but he's saying like going back to his cup and handle post. People are not trading; they're just trading the little handle thing because that's what they've seen online. They're not trading the relative equal high. They're not trading the liquidity sweep, the liquidity grab, whatever you want to call it up top. They're not trading anything on fundamentals. They're just trading a pure three white soldiers. Oh, it has to be bullish. I've seen it on Google, but they don't understand why is three white soldiers bullish. What are you looking at when you look at those three white soldier candles? What are you looking at? What is the price action telling you? What is the you know what I'm saying? What is the volume gap imbalance telling you of each day? Why, you get what I'm saying? People
That's it.
don't understand the price action of what they're looking at. That's why we go back and forth, and I was kind of chipping at him on his cup and handle because what he's saying is theoretically right because people would buy when it broke and then they would have got clapped, but they're not understanding why the cup and handle, and again, this is the overlap, why it was ever implemented into trading because it is a relative equal high liquidity grab,
Right.
and you have to wait for that break. You can't just fucking buy it on the handle break because you draw two lines above and below. When it's starting to regress or drop a little bit after the cup, you have to understand what you're looking at. And I think that's what drives Mando a little crazy is because he wants people to understand descriptively when you're looking at the three white soldiers, what are you looking at besides a Google picture telling you that to buy calls here because this is an uptrend.
Yeah, no, and that's how people are going to get better. I mean, and it drives me even more insane when accounts with 130,000 followers are the ones that are posting this because people are just going to see that and they don't have an understanding of it and they're going to get smoked. And bro, I got to be honest, I'm so tired of hearing people, oh yeah, I was doing this and I got crushed and now I'm just on to the next, looking for the next. And then they don't, at that point, they don't give it time to really like actually digest your, whatever I'm saying. You know what I mean? It's just like, oh, this guy's not going to give me the alerts. Okay, forget it. You know what I mean? So it's like that just drives me nuts because I see so many people who just get absolutely ruined because of these stupid large accounts just spewing BS. And it's like, and it's just all over the place. And it just drives me absolutely insane to see it because, again, dude, this is me 3-4 years ago, just searching, trying to find a way, trying to figure out something that I can use repetitively and something that works, makes sense. And it's just the same crap over and over again. And these people,
It's
it's almost as if they're getting rewarded because, their following's not going anywhere. They don't post live executions where they're live.
yeah,
They'll take a screenshot, which is probably the most easily manipulated thing that they can do. I mean,
yeah.
Photoshop is not like it's not science anymore. We have freaking AI bots creating images nowadays. I mean, look, maybe I'm nitpicking and stuff, but it's just like that stuff just drives me nuts to see it because, again, that's me, me and you really 4 years ago when we were like really
Yeah.
getting off the ground.
The SPAC eras.
Yeah, no,
So,
exactly. Exactly.
this is if no one else is talking, I kind of wanted to get off course and just say like a strategy that helped me kind of like turn the corner. But like
Yeah, for
you have a
sure.
couple people that wanted to talk. It's not a strategy. It's just part of what I did.
Yeah, no, you could definitely go. Again, if anybody has any questions, just, grab a mic. We'll bring you up. If you're shy and don't want to talk, just drop a comment or something like that. But in the meantime, Melski, take it.
I just wanted to go in on like the false illusion. Like for everyone listening, there's a lot of people that say like, "Hey, I want to join," and the first thing that people say is, "Hey, I want to join. I want to change my family's life and quit my job." You know what I'm saying? Twitter, Twitter has just created a place where these fools post a fucking goofy ass watch that they bought that we could all buy. A little Rolex or something, and they post it and they sit on their little nice car and they post the only gains, $800, 800% rippers. That's all they post, but they don't post none of the 10 that they lost, in between. Everyone's just like, even me 2 years ago, I was chasing the fast dollar. I wanted to get in SPACs. I remember I would be pissed if I bought 1,000 shares and it went up $4. I only made 4,000. Then I would lose 6,000, and then I would make 3,000, and then I would lose, always going down, but I would only show my wins type thing. And I think like for like when I was working with Seeker, in the last Discord, and Binky and J Bone. And one thing that I think helped like Binky turn the corner was you really gotta, like, when you're charting and stuff, you really gotta take like everything that Mondo's saying and stuff and like what I'm saying in our strategies. And yes, it may be confusion, but people are jumping in with real accounts. So people get clapped and they quit. You know what I'm saying? There's nothing that tells you if you joined this month in November that you're gonna make 50. You have to make 40,000 in December. So what I told Binky and stuff to do, the point is that if you're new, you're struggling, you're looking for a strategy, you're kind of understanding what Mando's saying, you're understanding like what I'm saying, but you're lacking execution, you're lacking discipline. There's nothing wrong with paper trading if you don't abuse it, one contract, or I always say, if you're on a small account, 2,000-3,000, trade one contract. This is what helped Binky, I think, turn the corner from his huge red account. He's got a pretty nice account. He's turned the corner. Is take one contract, trade that one contract for 30 days. Every trade you get into, just trade one contract and see how much of trading is psychological, how much that little wick going past 106.50 today, how much that you being oversized, a $2,000 account with 15, zero DTE contracts. See, and then when you sell, you say, "Oh, of course, it dropped. Every time I sell, it dropped. I would have been, I would have made X amount." And you get that self-pity because you're psychologically know what you're looking at, but you're getting out because you're over leveraged. You're trying to get rich now. So if anyone in here is listening, the best strategy I've ever told people is if you have a $1,500 account, trade one contract and trade it for over the course of a month. If you can't be profitable on one contract for a whole month, guess what? I could give you 100,000 right now, and you're gonna burn that shit by December. You're not gonna be profitable if you can't do it on one contract. You can't do it with 10. There's no way that you could get into trading and just get a couple lucky wins. You will eventually give it back if you don't stick to your model. And I think that's why Mando preaches his model so much. That's what works for him. My blueprint is, and my model is what works for me. They can be different, but what do we have at the end of the day? We have a model. We know when we're getting in, we know what we're looking at, we know when we're exiting, and we know what we're entering. So like if anyone in here is just saying that, like on the verge of quitting or they're not understanding, trade one contract and just see how it goes over the month. You will learn a lot over, you know, a $44, you know, SPY call. And if you lose or win, you will learn a lot more over the course of a month with one contract than you will if you keep burying yourself with 7 to 10 contracts, over leveraging your small account. So, I mean, I hope that helps someone just with a new strategy. Like next month, if your account's small, just trade one contract per day, one contract per trade. I always told Binky and like Seeker and them when they first got with me, it's the first 6 months is not about the money. First 6 to 8 months is not about the money. Every big trade, like Mando was saying, he was going insane. He was about to quit. He kept making a lot of money, and then bam, he would give it all back. If you don't have a model, you will not make it in trading these stocks. That's why they say the 5% or whatever make it. You have to create a model. You have to stick to your model. You have to stick to the discipline. And when you do that, you can do it with one contract or 10 contracts. It doesn't matter. But when you're learning, the one contract will save you from constantly blowing your account, constantly from reloading, you know, save you from quitting. We've seen a lot of people in the last 2 years disappear because they thought it was the COVID era and they could just blindly make calls and make $10,000. So, I mean,
Sure. Yo, so it's Stocked After Dark. You want to piggyback? Go for it, man.
Yeah, I do. Hey, Melski, that's a great point, man. I was about to say something similar. So, I've been telling my community something called the Power of One, which I've been telling them about from day one since I've been on this platform. Is basically the same thing as what you're saying. Is taking a trade size that you can mentally handle and that you can financially handle. Because I think a lot of these young cats, a lot of these new traders, especially the COVID traders, where everybody got in and it was like kind of a bull market. Like as long as you went long, you know, you made money. And a lot of people found out very quickly once we got out of that trading got real and it was a lot more difficult than they anticipated. And a lot of people that started trading COVID are no longer even trading anymore because they got wiped out. And I've, you know, with the Power of One, I've been telling people, look, it's sizing consistently every single trade that you know, every single trade that you, like you said, you take, be the same for a certain duration. I tell people in my community, like, look, if you're winning 70% of your trades for a certain duration, next cycle that you want to, however long it be, whether it be 1 month, 3 months, half a year, whatever time that you feel sufficient is for you, then add another size. It doesn't mean go from one contract to 10 contracts. Maybe go from 1 to 2 and do the same thing, rinse and repeat. If you find yourself, at 2 contracts now and you're able to handle that, then you keep doing that until you start getting a certain level of consistency and profitability, and then you add another one. If you're like, hey, I got to 5 contracts, but now I see my profitability and my win streak go down by to 40 or 50%, that might be your limit. You might have to scale back and whatnot. Oh, hey man, you raise your hand. You want to jump in?
Yeah, no, I didn't mean to cut you off at all, but just to kind of piggyback again, whether you're trading real money, whether it's fake money, if you don't have a repeatable model that it's something that you feel confident in, something that you can, repeat, obviously, and 3, can you justify it? Then what does it matter if you're trading real money or not? It's not sustainable. So that's the first point that I kind of wanted to make and piggyback off of what you guys were saying. And the second is, I get this a lot actually. It's, yo, why don't you ever post your losses, man? Well, first off, if you check on Instagram, I do. But the second part to that is the way that I have my model set up, you're never going to get that loss porn from me like you're going to get from some of these other accounts who are literally doing it, probably Photoshop, but they're literally doing it so that they can get more clicks, right? And showing these huge $60,000 losses. Anytime I show anybody here my losses and, post them in the group or anything like that, they're completely under control. And that, to me, that's the differentiator, because I'm not one to trade multiple NQ contracts, right? $20 a point, it can get out of hand pretty quickly, right? And I'm still in the process where, I do have the funded accounts and everything like that. And I want to build them up to a point where I do have leeway that I can move to multiple contracts and such. But in the meantime, I'm going to go with one contract. If I can score my 20 handles, beautiful, more than fine. But in the meantime, for what? I mean, and that's the thing, like, my model is sustainable and I'm able to continue doing what I'm doing and build up all 4 of these accounts. And the reason I can do that is because my losses are not out of control by any means, and I'm not going to let them get out of control. If you want to see, $200 to $400 losses, by all means, I'll post them all day on Instagram. But it's not that loss point that everybody else is looking for, and that's why I think people are always complaining about it. It's just like, it's there for you. It's just not something that you're going to get all hyped up about watching somebody else lose. I mean, unfortunately, but
and
yeah. Oh, go ahead.
That's crazy, because like when I see the losses of like 68,000, like I get it. If your account's at like 5-6 million or some shit, and those are
I
your
puke.
losses, then can you hear me?
Yeah, no, I
Yeah.
puke. I puke.
Yeah, I'm saying I get it. Then if it's huge, like, I mean, I just don't get how, like, you have a true model and you have an entry X and you're not just YOLOing bullshit calls or puts, you know, zero DTE just for your little Twitter followers. There's no way that you should have ever in a fucking one trade lose 64, 65,000, $60,000 in one trade. That means if you did, that means you're buying in with what, $500,000, $400,000. Like, I just doing the math off the top of my head. It just shows that some of these dudes that are posting these huge ass wins, these huge losses, and these little fancy cars and shit that they could have, it's all just like, they have no model. They're not teaching no one nothing for sure. They're charging $300 a month. If you're losing $60,000 in a day and you're charging people $225 a month per member, what you're doing is taking their money and YOLOing and fucking calls, and when you hit big, you show it. You know what I'm saying? There's no model. You had no exit point in your trade. If you're losing $60,000 in one trade and they show it for clicks, that means that they surpass where they buy. I just don't understand where they're buying it. They're just buying in the middle of the chop and letting it go 60,000. They're not buying at any, if your skill is volume imbalance, fibs, anything. You're buying at a certain point in that chart where you think is support, resistance, liquidity grab, whatever you want to call it. You're buying somewhere with your model that has worked over time. So if you're losing that much, I truly don't understand how someone could blow half their account or their whole account with a true proven model. And you see these dudes with fucking 120,000 followers. It just blows my mind. I can't.
No, it is really mind blowing.
Like
But
it.
Talks after dark for sure. And then I want to hear Ryan. Ryan's in here finally.
I was going to point one last thing out for everybody listening. I think for everybody that's trading, whether you're new or you're experienced or you consider yourself a pro trader, one thing to keep in mind is that, look, at least from my perspective, if we're trading, I'm looking at long term. I'm not looking at tomorrow. I'm not even looking at next year. I'm looking at 5, 10, 15, 20 years down long line. Most of the traders here, I mean, I would say that we're all between the age of 20 and 50, right? So that means we still have plenty of time left on our lifeline to trade, to make money, to make the money that you all want, right? So just keep in mind, this is a long game for me at least, and making money compounds, right? I think a lot of people are so quick in trying to get $10,000 a day that you see, especially from like these bigger Twitter accounts. Like, like some people are posting, oh, I had a 300K day. I'm like, okay, that's great. But the problem is most of you don't have that kind of capital, nor do you have that mindset ready for that, right? So I tell people, look, man, there's about 250 to 252 trading days in a year, depending on February. So even if you make a small amount, like $100 a day, that's 25K a year. If you make $200 a day, it's 50, 300, 75, 400, 100K, $500 a day. If you make $500 a day, that's 125K a year, right? Unfortunately, that's probably more money than half the people listening, right? Because the median income in the U.S. is like 60 something thousand dollars, right? Most people don't make six figures, and I think that's what the reality is. A lot of you don't realize that you're like, hey, I make $100 a day easily in trading. You're right, you do, but you don't keep it because all you see is today. You don't see tomorrow. You don't see the end of the year. I can guarantee you right now, if Mando pulled out his checking account and wrote you a blank check for $25,000 and said, look, if you are able to promise me that you will trade this model and you will take $100 profit a day, I'll give you $25,000 right now. Every single one of you, I would say, would take that in a heartbeat because you have it now, but you can't see that because all you see is that $100 right now, and you can't project that forward from a year from now. And that's the thing that gets everybody because you don't have the patience, you don't have the rush, you want to rush the process, right? What you see from many people, especially the people that you're following, with bigger followings that show you what they're doing, you have to keep in mind this is not something that happened overnight, meaning that it didn't happen in 6 months or 12 months. Now, don't get me wrong. I know there's somebody's gonna be out there and be like, well, somebody did it. Of course, there's always gonna be that 1% that defies the rules. But most of the people that you see that are successful or consistent in trading have not done it in 1 year, right? It's taken them multiple years, some people a decade or even more. So what you're seeing now is the hard work of their labor, not just the overnight success. And just put things in perspective, I think a lot of people would get that misconcepted and mixed up, is that you see what is on FinX or FinTwitter, whatever we want to call this platform nowadays. It's just a fragment of time. You're not seeing everything that people had to go through. You heard Mando talking about like 3-4 years ago he was struggling. Everybody here struggled and whatnot. So it just takes some time that you have to be patient. And if you trade consistently for a year or so, and be patient with the small gains and consistent gains. I think you'll be surprised how much you actually end up at the end of the year, at the end of year 2, and by any year 5. Honestly, if you're able to do year 1 $100, year 2 $200, 3, 4 $100 every additional every single year, you'd be like, hey, by year 5, I'm making 125K a year, and that's not for all day, right? None of us are. I'm not sitting around all day looking at the market, right? You might get your trade in within 30 minutes, 60 minutes, especially if you're trading futures. We're done in an hour, right? You have the rest of the day to do what you want, because the reality is you're not in the market for flexibility, right? A lot of you say, I want to leave my 8 to 5, 9 to 6, 7 to 4 job, right? But if you're sitting in front of the computer all day looking at the market, trying to make a play, then that really defeats the purpose. Now you're just doing this same job, trying to do this, what you were doing before, and get the flexibility. So I just want to put that out. Look, be patient with it, and you guys and girls will get there. And don't discount $100, right, or $50, right? I guarantee you, a lot of you would be happy with 12.5K at the end of this year for 30 minutes, 60 minutes of worth of work. So that's all I want to say.
No, bro, that's so spot on. And I really like that analogy you used about, having 25K. Just you have to stick to one thing and one thing only and take that $100 out of the day. And, when you put it into that type of perspective, it's just so much different. Nobody wants to look at that, because to me, Twitter can totally be poison. You see these big gains, you see the Rolex, you see the cars and everything like that. But look, to me, I know personally, I mean, and this is me probably from year 1 to about 2.5 years in, where I just felt like, the sizing was just, I look back at the sizing and I'm just like, dude, this is outrageous. What was I thinking? Like, yeah, there'd be days where I'd make a stupid amount of money, and then, throughout the rest of the week, I'd bleed it, more than half of it out. And then I'd have to pick up the pieces. And that's the difficult part. But, I get it's really just the way you look at it, to be honest. Are you looking at it from I want to get rich quick? Because honestly, I mean, you might be different than me, but me personally, it just ain't it. And once I go into, even if it is the most beautiful setup, something that I play all the time, if I'm way over leveraged, I'm gonna, you're gonna press. You almost want to be, in a sense, robotic. I know we are humans and we do have emotions, and I do have a problem when people say, you have to be emotionless when you trade and everything like that. Um, in a sense, they're right, but guess what? We're still humans, and we still are dealing with all of these external factors that, ultimately we're going to have to endure. There's going to be that thrill when, one of the trades that you're in just goes bananas. And on the inverse of that, you're going to be sweating it out when it goes against you if you're not managing your risk properly. So, to me, I am trying to get to a point where I'm robotic. And the way that I say that is because I will literally just have the trade planted on the screen. Here's my entry. Here's my stop loss. Here's my take profit. And I try and not manually intervene whatsoever until I get to a point. For me personally, it's 20 points. When I get to 20 points, that's when I'm super aggressive with my stop and profit. Because to me, listen, my trades very rarely last over 20 minutes, right? So if I'm looking at it from this perspective, in 20 minutes, I made $400. Is that good? That's better than like 90% of the country, right? Or even the world for that matter. I mean, that's more than fine with me. So if I can, kind of stick to that and actually be sustainable that way, why not? Look, of course, are there times where I get stopped out and we take another leg and we go higher? Absolutely. Today, one of my trades, I hit $1,000 in like 2 minutes, and then that thing went, another 100 points. That's another $2,000 that I left on the table. But guess what? I made $1,000 in 2 minutes. Can you really be disappointed in that? So, that's my POV there. But Ryan is in the building. Pinks also is requesting a mic. So let's go to Ryan first, and then we'll come up. But Ryan, what's going on, man? I just, it would be really cool to kind of get a little bit into your strategy. So for those of you who don't know Ryan, he's also in the group, but Ryan is the one who really put me onto this idea of trading, and forever grateful for him. And I really respect his ideas and everything like that. And it's just funny, we do use the same concepts, but very, very much differently, I think, in terms of our models that we use. So, just to kind of get a little background, I think something, I definitely know something that he says here is probably going to resonate with you in one way or another. So,
I mean, hey, what's up? So, yeah, I loved listening in on everyone else's thoughts. I liked what Melski and Stocks After Dark said just recently about position sizing. I think that's incredible. I mean, that's just great advice all around. It doesn't matter what strategy you use. I mean, I know me and you, Mando, yeah, we were put on to ICT, and the whole thing with this strategy is I mean, it essentially is like what we found and what we resonated with precision and with, the accuracy that we were seeing. But I mean, if I had to give a suggestion to people who just joined the Discord, you can look at anyone else. You can look at Melski's strategy too, and I think what he said was really great. Especially about, if you don't have a model, you don't have a strategy, you can position size in a way where, if you're doing the same position size every day, like what Melski said, like a spy call or something where you're just managing that risk, you're just gonna see yourself find the faults and the mistakes in your own sort of trading, rather than, if you're trading with 5 contracts one day and then go 12 the other day and then 8 and then whatever, you're not finding that consistency in at least the position sizing. So if you don't have that and you don't have a model, you're getting really wrecked by the swings in the price action. But I would just suggest to anyone to just come into the Discord, look through the different strategies, and you don't even have to trade. You can watch, you can back test other people's, you can look at Mando's strategy and just back test it for a week, or Melski's strategy, back test it for a week, and find what resonates for you. Because I mean, I agree with what Melski said earlier. Like, it's really not about the strategy. You just got to have that discipline. Like, you gotta have entry, exit. You got to stick to it. You got to have that consistency and like having the same setups, day in and day out, and just go through that trial and error to fix your mistakes. Because at some point, I mean, you can trade MAs, you can trade supply demand, you can trade support resistance, and you can be profitable, immensely profitable. But it's just up to the trader. It's about pressing the buttons and getting really comfortable with your position. So I don't know if I really have anything else to add to that.
No, I think, and lastly, I know this is a point that you make, and this is something that you said that is stuck with me through time, but it's like almost make your trading boring in a sense where it is very repetitive, and at times it could totally be boring. But when you're starting to cash checks and that repetitive boredom, it becomes a lot better knowing that not only is your confidence going to be so much higher in terms of whatever trade or whatever setup that you're taking, which to me is a huge thing, and we can kind of get into that after I want to get Pinks up here and talk. But I think overall confidence, where does confidence come from? It comes from you putting in time at night, learning, whether that's on YouTube, whether that's on Twitter, whether that's in a voice call, whether that's on a Twitter space on, whatever it is, Wednesday night at 10 o'clock at night, that's where you build your confidence. And, obviously you need to spend some time in the lab refining things and working with the chart in your back pocket. But, having all of those little things culminate together, and then then you almost run into a point where it's like, am I being cocky, or is this just extreme confidence? And that's something that it will come into play for sure for pretty much everybody who gets to that point. So, but yeah, no, I mean, thanks for sharing that, man. Definitely. But let's get Pinks up here. I know. Thanks for waiting. I know we kind of went on a little tangent there, but how's it going?
Hey,
There you are. How's it going?
I didn't ask to speak, but I heard you calling me out, so I said okay.
Oh shoot! No, yeah, no. I've definitely seen you quite a bit actually. I don't know. The algorithm has been definitely pumping you over on my side lately, and I know that you had made a comment on one of the posts that I made earlier, and I'm just curious. Like what kind of setup or ideology that you kind of use, and something that you can I guess share and see if maybe it resonates with somebody else here.
Yeah, so I started trading in 2009, and I started trading over the counter pink sheets. That's why I'm pinks. And
Uh,
like, if you ever trade that, you learn real quick that you need to scalp like properly, in and out. And that's where I learned how to scalp. And as a day trader, scalping level to level is like everything.
Mm-hmm.
It's everything. Like all of the hold on for dear life people just boggle my mind because that's like the worst approach when you're a day trader.
I would agree with you completely. Yeah. I mean,
Yeah.
that was a problem that I totally had. And, this is going back into 2020. And I think this will lead kind of into, what you were saying. But, I got into it at a time, I did have some familiarity with the market prior, but, I didn't really have substantial money to do anything really. I was in college still working, then I went into grad school. And, after a couple of years of working, I finally had a decent amount of money that I could put in and, actually make a decent amount of money. And this is when I was swinging commons, right? But obviously 2020 was crazy, and I ran into some dumb luck. And then once the tide started to turn, when it was towards the end of 2021, thankfully I had some good people in my corner tell me, like, look, you kind of need to, not in these terms exactly, but you need to learn how to do this shit, or you're going to lose all the money that you just made, right? So obviously when you do kind of pivot from somebody who is just buying commons or loosely looking, not trading options or anything like that, things, you're going to go through a rough patch because you really need to hammer down some sort of strategy. And it's amazing how I've grown from that, where I was buy and hold, and this is commons, of course, into, trading options, whatever. And now it's literally, for me, an ideal trade would be less than 20 minutes in a futures contract, So it is amazing to see the growth and how that leads into your point about, kind of scalping from level to level. That's really all I do at this point.
Yeah, absolutely. And in 2020, we were all doing the same thing. We were all like just getting lucky after, like it was just crazy. It was a crazy times where we all kind of stepped into shit, for lack of a better word. We all kind of did, right? But what was happening with us? We were working until 7:30, 8 o'clock at night, right? Like until like after hours was closing. And then we all discovered options. I don't know, like I think we all kind of like follow and fall into the same type of thing at the same time, right? So like when I discovered options, complete game changer,
Yep.
right? Because now we're not working from 4 a.m. until 8 p.m. We have like just market hours, and we're making the same or better than we were before. Granted, that initial period of pain that
Right.
everyone goes through when you start options, which is intense and it gets crazy. But once you get over it and you get more discipline and you're okay with the $50, $100 a day, once you get to that point, then it just becomes easier. And every day, like you have growth. So what I do, how I discovered success is I found market profile.
Mm-hmm.
And I
Okay.
just basically,
That's a price-based thing, right? A price-based idea.
it's 100%.
Right.
It's price and time. So how long did SPY stay at 420 over the course of the last 5 years? Right.
Mm.
So it's measured that way. And once you find that over the course of the last 5 years, price likes to hang out at 420 20 cents for a long amount of time. So once it gets to 420 it pauses, and either it's going to pause and hang out, or it's going to pause and it's going to reverse like real quick because it doesn't want to go beyond it. And it's like very specific to the penny. It's like magic. I call it anchor magic because it literally is. When you get to a certain price point, which is predefined, it's pretty much constant. It doesn't change because it's measured over a period of time.
Right.
When you get to that price point, like literally price will just pause, and that's where you take your profit and you hang out and you sit back and you wait to see what happens next. Or if it's like matches up with another level, like a trend line, or where gamma happens to be, if it lands on that specific price point, then you know that you should actually not only protect your profit, but reverse right away because you're likely catching a really good opportunity, like the bottom or the top, which we never want to catch the top or the bottom. Like we never want to be chasing that because over time success rate is going to be not very high, right? So like that's not like I don't try to do that every day, but at certain areas we pinpoint them, and that's where we do try a knife catch or a rocket catch. So basically, market profile, I highly recommend it. It's definitely worth every single penny, every single like minute of your study time. It's going to help. Like everything that you already know, it's just going to amplify it to the like maximum, because you get to a resistance point, you're like, oh, here we are at resistance, and like you just pick out a random number like 420 through 421, but you actually have an actual pinpoint. It's 420 and 20 cents. It boggles my mind every time I see it happen in real time, and I see it happen every single day.
Right.
So
Yeah.
I encourage everyone to Google market profile and study your ass off.
Yeah, no, I mean, my, I guess, next point would be, and I think, pretty much everybody else who's been a speaker at some point or another, would you agree that there is some sort of algorithm that delivers price to make it as precise as it is?
100 billion%.
Yeah.
100 billion%. And you'll see it on days like today, for example, at FOMC day. You'll see it on days where like there's a specific catalyst, non-farm payroll, any of those days, or when Powell is expected to speak. And when I say you'll see it, because price will literally be at one of like a crucial point. It'll be at a crucial resistance or a crucial support, like right there, just pausing, hanging out. Like how did it miraculously get there? Because the algorithm took it there, right? If we're hanging out exactly at the 200 daily moving average, just by chance, like on FOMC day, just hanging out there waiting for like something to happen. It didn't just get there, because we all took it there. It was an algorithm and we just followed. We're just followers of the algorithms.
No, I think it's pretty cool how, obviously, strategically, I guess ultimately when it comes down to it, price action and using price action to make decisions, it's more similar than not, no matter really what strategy. I mean, we've heard, this is the fourth different one that we've really talked about in just a short time tonight. And there are a lot of things that typically line up. And one thing that you said that resonates with me, at least, is specifically when we talk about catching tops and bottoms, that to me would be more of, and I'm not saying the absolute pinpoint top and bottom, but that's what something Melski or Ryan would look, because they're really playing those liquidity sweeps, whereas someone like me or you, I think we're looking for some level of confirmation to kind of further our I guess confidence in whatever trade that we plan on taking. I'm not looking for that immediate purchase off of a sweep. I'm looking for some sort of imbalance in price to be created, and then look to take my entry or something like that. But and Timmy actually made a good point in the comments here. He just said you can measure it, and it's actually something that he showed me a while ago on how he measures the order blocks, and he's able to kind of project where price is going. It's actually pretty nuts. Yeah.
All right, awesome. Thank you for calling me up.
No, absolutely.
I'm gonna just go mute and listen in, but I have to go take care of some other stuff.
Nah, I got you. Thanks for popping in. Yeah.
Thank you.
But yeah, anybody else have anything that they want to pop in or bring up? Honestly, I've talked a lot, so let's see. Actually, just quickly, if nobody else has any other questions or anything, I did drop some charts on Twitter a little while ago, but one was Apple, obviously, into earnings. It's not something that I'd particularly be interested in. One thing of note is that we did leave behind an after hours relative equal highs, so that'll be interesting to see if we do end up reaching above. I know futures is higher, so I would say we probably do move higher, closer to 176 prior to this earnings report coming. The second being Tesla, which is actually really, really interesting, because Tesla, different from many other names here, obviously still in what I would consider a bearish market structure. So the way that I would judge something like that is, do we have a recent swing low breach? Yes, we do. With what price run? And if you look at the chart that I have, that's where I would map out my fib range, right? And I'm not necessarily a Fibonacci trader. I don't use them unless there is confluence with a bearish imbalance, specifically in discount. And in discount, where in discount? If we want to get really particular, to me, 62 to 79% is beautiful. There are a lot of times when, let's just say, market is pretty bearish, whether it's the indices or higher time frame is still suggesting lower. Sometimes there's an imbalance right at 50% that I'd like to nail. And an example of that, if you type in Mando Trading and do the money sign AMD, you'll look back a couple of days ago. I think it was actually last Thursday, but it was perfectly right to 50% for the rejection. So technically discount, so it plays. Not ideally the location that I would look for the best risk reward, because the way that I break down a range in general is, if we're at 50% and I take that trade, whatever direction, it might be, maybe I have a strong feeling in either direction. But in terms of the game plan for it, what's going to make the most sense to me, a 50-50. So for example, I'd be risking 50% of the range to make 50%, because my target would be the swing low. My stop out would be the swing high, because if we break swing high, what happens? We get a bullish market structure shift. And to me, then my trade idea is out the window. So that's the reason why I put so much value to mapping a range and having an understanding of where price tends to go. And again, this is, to me, this is all algorithmically driven. If you disagree with me, that's okay. But I have in the group a specific tab, and it's the model that I use and how it repeats. And I put it up about a week ago, and there's probably 20, 25 instances where the model repeated over and over again. And for whatever reason, I didn't code this algorithm that delivers price. But I will tell you, with back testing, and once you see it, you can't unsee it. Price loves to get into discount prior to making that next move. So, ultimately, that's, I guess, the overall ideology behind my strategy as a whole. Now, and this will be my last point, because I hope I'm not boring anybody too much. But the last point here is, so, someone might ask, and this is the way I was for quite a while, actually. So it would be, that's my one model. That was where I was taking literally 100% of the trades that I took were coming from that specific model, right? Well, there are instances where it might not occur, or it might be very sporadically occurring throughout the day, and there might not be very many opportunities, right? So I'm looking at it from this perspective now. And, we can use Tesla as an example here, because the chart is up above, and I think it'll be beneficial to have some visual. I think next time around, I'm going to do a live screen share, and I would literally structure this the way that we do our nightly calls in the group, where I'm sharing my screen. We go through specific levels, and you can kind of see it the way that I do, and I can use that as a, visual learning experience. But with Tesla here, look, we set a range, right? Do I necessarily know where that bottom of the range is going to be? Not necessarily. I don't. I'll be real honest with you. I can have an idea. It bounces off one of my bullish fair value gaps, sure. But why did it use that one and not the other, right? So there's a lot that goes into it as to why, I don't try and particularly pick out tops and bottoms, right? So for me personally, now I'm not always just waiting for that bearish retracement like Tesla just got, right? I do look for that move from premium, move up into discount, and I can long something like that, right? And what would be the, I guess, telltale or giveaway for me to take a chance on something like that? Because again, I do not know the low, right? This range to me isn't set until we retrace back to 50% of it. If the range doesn't get back up there, then range ain't set. There's really no trade. But the fact that we made an imbalance, so if you look at October 31st, right before 12 o'clock, it's probably right off 9:30 open, but we made a bullish imbalance, which is that little green rectangular box right there. Price retraces back down into it, and that would be a circumstance where I would actually look to long that up into the discount range. So my take profit would be specifically looking for a bearish imbalance in discount as my take profit. And then from there, it's almost as easy as all right, I'm bearish here. This is where, my optimal short entry would be anyways. So I would take my profit at that point. Or for me specifically, I I trade NASDAQ, so I actually like to let that thing run a little bit. So most of my trades, if you watch any of the videos, it's usually me getting trailing stopped out. So I'll move my stops up in profit. And I don't want to say greedy, but I'm a little more aggressive with where my take profit is going to be. But I'm also equally as aggressive with where my stop loss and profit is going to be. I do move it up aggressively so that I don't give back too many points, but I also want to see if this thing can run, so that's kind of the difference. And to me, a reason why I love just being able to place the trades directly on the screen. I know with options it's a little more difficult because it's not, just straight up numbers where, at whatever specific point, you don't necessarily know how much that contract is going to cost. So that's where it gets a little tricky. But once it gets to a certain point, the way that, I still trade SPX. So the way that I look at it is, look, if I'm happy with the money here at whatever specific point it is, that's where my stop loss is going to be. And hopefully it lines up with where, one of my levels would be in that situation. And that's really ultimately how I ride out with any of my trades. Obviously being on the right side of it is pretty beneficial, and you kind of need to be right more often than not. But again, if me personally, I feel comfortable getting stopped out 3 times, that when I hit that 4th trade, I'm making up for all of those stop outs plus more, because I know I'm going to let my runner or my winner run higher than what my losers are going to take me out on the downside. So I mean, that's really my last point. Oh, we got Stone Pizza up here. Hey, Pizza, you got anything, man? Want to add? And then I'm going to just shut it down. But
Yeah, man, I appreciate it. Can you hear me?
yeah, what's up, man?
Okay, cool. I can't see myself talking, but anyways, I'll give a little context of myself. I've been doing this for 8 years. Not using a stop, trading off of my phone, not using a laptop. If you end up not having a strategy,